Hey folks, Vic here with your weekly trade video. And before we get to this week's video on effective Forex scalping versus long-term trading, I just want to let you know that my Coach's Corner partner Darko and I will be holding a webinar on Monday, September the 12th, 3 p.m. Eastern Time. So why are we holding a webinar? Well, it's in response to a survey that we just sent out. And in that survey, we received some common answers. So we are going to make some changes that I think you're going to really like. Like anytime we were able to accommodate the wishes of our members without compromising the value of the service, I mean, gee, we're certainly happy to do that. Anyway, I hope you can make it to the webinar. There's a link to register in the text below this video or in the email that you received. And even if you can't make it live, register anyway and we'll send you the recording. Okay, on to today's video. I want to run over the process of how we trade the Forex on a short-term basis and how we trade the Forex on a longer-term basis. The similarities, the differences, and especially the mindset differences between the two. So I hope you like the video. If so, we'd sure appreciate a thumbs up by hitting the like button. Then, of course, be sure to subscribe to the channel by clicking the button in the bottom right corner of the video. Alrighty, let's look at a short-term trade and a longer term trade and check out the differences. Okay, so first I'm going to cover a short term trade, then I'll contrast that with a longer term trade. I want you to see the differences and the similarities. There's a lot of things that we do that are similar. In fact, the process is the same. Okay, it's very important that you know your time frame combinations for different styles of trading. Okay, so so they have to know where your stops go, where your targets are, and all that kind of thing. Consider the trend on all the time frames that you're looking at, all the time frame combinations. Is it clear? Ask yourself if it's clear. If it's not clear, move on to something else. Why fiddle around with stuff that's murky and just not very clear? And I want to just touch on the mentality because it's very different for short-term trading than it is for long-term trading. So let's have a look at this. This is the British pound Japanese yen pair. And actually, I posted these levels. What I do for our short-term trading members, and I look after our short-term trading, by the way, and Darko looks after the longer-term stuff. What I do is I will occasionally post levels as educational, but also, I mean, they're real levels, ones they can definitely watch for taking action on. And yesterday, I posted these levels, and when I say today is actually Wednesday, August the 31st. But I posted these levels for use on today, and on the daily chart, I'd actually had my level right here under this low on the daily. But if you look at this, we have a really good level here as well. I mean, this is a good level. Look at the reaction here and here and here and almost here, again here, and it's held it for so much. So the question is, well, that's easy to say, but which one do you use, this one or this one? Let price tell you. Don't guess. Like when price gets to these lines, what does it do? Does it give you a trading opportunity or no? Okay, so let's go and look at a 4-hour chart, because this is what we call a micro scalp, and what it does, the time frame combinations that we really want to look at are the 4-hour, the 1-hour, and the 5-minute. The 5-minute is our entry time frame. So this is for people who really want a very short-term way of trading, but very effective. If I look at these levels on the 4-hour chart, this is the level that I had marked when I posted the video. But if you look at this level, would you say that's a good level? In fact, let's zoom this out a little bit. I mean, it's a good level. It's been reacted off of a lot. Right? So, yeah, did it come down here? No, it didn't come down here. It didn't come down to here. It just made it this far down, which was this daily and this 4-hour. I mean, that's pretty irrefutable. When it hit this level here, it just kind of climbed. And so the question is, when it hit this level right here, was there a reason to take a trade? So this is a 4-hour. Let's go look at our 1-hour. And on our 1-hour, if we bring this and zoom it in a little bit, this, folks, is a fantastic candle. That's a huge rejection candle, an ACAT trade. And then what we do is we go down to our entry time frame, and we have rules for getting in on these ACATs. And they were met, and this was that huge pin bar reversal that we just saw on the hourly chart. And here's the pullback entry on the 5-minute chart, and you can use various levels to get in at. I prefer deep retracements personally, but it's personal preference. And then the question is, now what do we do? So remember, this is short-term trading. This is like getting into a trade and you want to be out of it that day. Sometimes you can be, well, you could get stopped out and it could take just a few minutes, or you could be a few hours, which is what happened in this case. And this trade, buying it at this deeper level here, needed a stop of just about 13 pips. Now the question is, where do you take profit? If you look at this, first of all, it's a day trade. So, you're not going for, you can get big runs in these days, but you want to look at logical levels of places to get out of a trade, okay? So in this case, when you look at your hourly chart, this is a pretty good level in here. You see that? And this gives you about the entry on this was about at 161 even, the figure, very significant level as well, by the way. But in any event, this gives you about a 50 pip profit up to here. That's 50 pips on a 13 pip risk. That's pretty big, right? That's getting close to 4-to-1 reward risk. So if we go back to our entry time frame, you'll see that not only was a good level on the sorry, bring that back up, on the 1 hour chart, but from this low to this high, when price pulled back for the fill, it went up to the extension, which is at the same place. Right? If I zoom this way out, you'll see it. I'm not saying use the 5-minute chart for this kind of stuff, but you can see all of this stuff in here was a good level. Again, I shouldn't even have gone there, because that's not what you want to be doing. You want to be using like that hourly chart or these the extensions are very, very good. If you get a deep retracement and an extension for a profit, you're going to have a nice trade. Okay, like in this case, almost 4-to-1. That's the mentality. You're done. You're out. You're gone for the day, and now you'll wait and see if there's anything tomorrow. Okay. Now let's contrast that with a longer term trade. In this case, a swing trade, and it's a different mentality. You're not in this to make 20 pips or even 50 pips. It's a bigger trade. The trade I'm going to show you is one that Darko pointed out in his PMA to the members in advance, as always. And what he told everybody is that, hey, we've got this level on the, now we're using a swing trade. You're looking at monthly and weekly charts, okay? And this could be a position trade or a swing trade, but I'll show you why it was a swing trade instead. In this case, we came back down to this monthly level, pretty good reaction there, and it hit it here, pin bar reversal, then it came back down and retested it. And on the weekly chart, which is here, if I zoom that in a little bit, really good level here. That's a great level. Reacted here, it hit it again. Right when it reacted here, we had this big rally up, and it came back down. When it got to this level here, what can you do? You can use a 4-hour chart to see if there's a logical entry, right? A logical entry and a place to put your stop loss that makes sense. So what Darko showed in his video, and here's that level right here. Here's the move higher, and he looked at the Fibonacci retracements and saw that they came right to this this weekly and monthly level, same place, and that was the entry that he had shown in his PMA. And this trade here's the difference. You're not, listen, you got to leave this alone. This is like what we call a hands-off trade. Why is it hands-off? Because everything is heading up on this pair. This is, bullish, higher highs and higher lows on the monthly chart, on the weekly chart. What is it? Same thing, just breaking to new highs, pulls back, new highs, pulls back, and it's heading up again. This has got some real potential to it. These are the kind that you want to do what's called hands-off trading and leave it alone. The trade needs more pip risk. Obviously, it's a long-term trade. Needed about 185 pips. Right now, it's up close to 500 pips. And the first target on it, right, if you start looking at your targets up into here on the weekly, it gives you about a 1,300 pip profit on 185 pip risk. I think it's around 7-to-1. Right now, who knows if it'll get there. Now it's about trade management, but you can see the potential. Certainly, well over a 2-to-1, 2.5-to-1. I guess it's getting close to 3-to-1 reward risk right now. But you have to have the right mindset. You have to have a trading plan for sure. and you have to have a very good trade management protocols in place as well. Okay, so I hope you see the difference there, and they can both be extremely good ways to trade, but you do need to know what you're doing, and you do need to understand that this is an odds game. These don't all work. I wish they all worked like this. They don't, but when you don't need for them to all work. You just need to get in on some of these trades, and you're going to have a very good successful trading campaign. So there you go. I hope that helps in terms of just knowing the way that you would prefer to trade. Just gives you a little glimpse into what to expect with each different style. The process is the same. Identify higher time frame levels of support resistance. See if they match well with other higher time frame levels of support resistance, and then just use a pattern to set up an entry on your entry time frame. And of course, you need to be okay with whatever style you choose as far as the mental part goes. Like if you can't stand being in a trade very long, then a shorter term trading plan is probably the way for you to go. However, if you have a job or other obligations and you have the mental ability to just leave the trade alone and just manage it from time to time, then definitely a longer term approach is the one for you. Thank you so much for listening in. Don't forget to register for our webinar coming up on September the 12th. Have a great weekend. Take care.